I have the pleasure of welcoming everyone to today's Frontier Opening Bell. Thank you very much, Joshua Debisi, the banking analyst at Vetiva Capital, leading securities and investment firm based in Lagos, Nigeria. Morning, Josh.
Morning.
Thank you so much. And Ali, thank you so much, the CEO and founder at Rich Frontiers Management in Nairobi, Kenya. It's good to have you. It's a Friday.
Indeed.
And we can all use the weekend, as it were, the first one in the month of August. So it's been a very interesting market week. So let's just give you, everyone, a quick snapshot of how we finished off yesterday. I'm sure these are pretty well on the street by now. The Nigerian market, Egypt, Kenya, and South Africa finished in the green. Ivory Coast, the BRVM was negative 0.26%. Egypt had remained steady for the week. Nigerian market has also been steady for 4 sessions. And then you find Kenya making a very strong comeback on Thursday, 2.03%. Sticking with the East African market, the banks were the big boys as far as Thursday trading day was concerned on the Nairobi Securities Exchange. Investors bought heavily into the banking sector. Meantime, the problem with the workers' pension and the deficit is a ticking time bomb for the Kenyan authorities. How that is being resolved, we'll look up to Ali to give us a sense of that. Meantime, Kenya Power and Lighting Company, the KPL PE, which is listed on the exchange, says it's gotten a 12-month moratorium or breather on its foreign loans. That's a good story. What's the announcement from NCBA, this commercial bank, about new shares being issued and dividend? Meantime, Uganda Business Tendency Index reached 46 in July. That looks like some good news there. Ali, let's float this with you, starting with your trading day on Thursday and the announcement from NCBA. But again, the pension issue gets me worried. It looks like we have a problem that could be similar to Nigeria here when it comes to government deficit in meeting pension obligations for workers.
Absolutely. So I'll just start with the news that we've crossed 1 million cases on the African continent in the case of the COVID-19. I was looking at dates. On the 14th of May, we were just at 54,000. So you can see it's been quite an exponential increase over that period, and I think that should be in the background of our minds as to how that's going to continue to affect us. With respect to Kenya and the headlines you spoke about, the stock exchange rose yesterday, but really it was a function of a rebound in Safaricom, which controls 50% of the market capitalization at the Nairobi Securities Exchange. The banking sector came under further pressure, in particular Equity Bank, which dipped below 30. And the banks have been struggling this year because of the problems that are pernicious across the entire continent, which is around the slowdown in the loan book, the restructuring that has happened, and the longevity of that restructuring exercise. People are getting quite concerned here, and you're seeing that in weakness in these banking stocks. The story regarding Kenya floating government pension as deficit time bomb ticks, I couldn't have written that headline better. I think a lot of our policymakers and politicians are just so far behind the curve in understanding the speed with which the freight train is coming at them. And I think you're seeing this across the continent. I find very few policymakers who understand the scale of the problem and are telling it straight to their citizens. We can't afford these kinds of amounts. This is, the numbers don't add up. And when I found that numbers make no sense, they tend to be nonsense. And somehow our policymakers think that there's a Santa Claus somewhere that's going to keep on bailing us out. And my concern is, if we don't sort it out ourselves, the market will sort it out for us. And just take a look at Turkey to see what the market can do when it gets into control. Your currency gets walloped, you quickly run into a currency crisis, and the whole situation spirals out of control. So big concern about recurrent expenditure, the liability side of the government's balance sheet. And I think that's going to continue to feed into weakness in the shilling. And that's what we should really look at, because the shilling is the best proxy to understand the stress in the system. Kenya Power, as you know, is our main power company. It's been a political hot potato for a long time. So, for example, at the time of the elections, they didn't pass through price increases and basically have been struggling to somehow make the consumer bear the proper price. There's also terribly inefficient, but partly it has been a political issue. And I think we see this in many parts of the continent where the power companies are basically not solvent, in part because politicians use it as a tool instead of passing the cost through. So, but this is good news that they've secured a 12-month moratorium on their foreign loans. They're looking to also secure a similar moratorium on their local loans. But essentially, they've got to thread a needle here. And that threading the needle is not about moratoriums. It's about fundamental restructuring of the business. We spoke about the wholesale removal of the previous board. The government is invested with the problem, but they're going to have to deal with it going forward. NCBA to list 606 million new shares, raise market cap. This was post the merger between two banks last year, and propelling them into a tier 1 position. And Uganda Business Tendency Index 46 in July versus 43.1. Uganda, a little bit like Rwanda, has been very successful in the fight against COVID. Quite a military approach. Both Kagame and Museveni are military men, and they don't brook any nonsense. And you see that in the slowness of the rebound, that they still have a very restrictive policy towards their economies. But if you look at their numbers, they are the shining lights on the continent at the moment, Uganda and Rwanda.
Interesting similarities between the presidents of these two neighboring countries in terms of jackboot approach to ensure that folks stay at home, people are getting arrested on the streets, they are fined, whatever it takes. Ugandan president is shown in his living room jogging and doing morning exercise indoors. I've seen a couple of the press ups and all of that. It all goes to show that, look, I'm staying indoors, everybody stay indoors. But again, we understand how it works over there. If they're getting it done without overstepping human rights issues, abuses, and what have you, maybe it works within those jurisdictions. Joshua, I'm sure the story around the banking industry resonates with you when you look at the Nigeria banking space as well. But just before you answer that, if you look at the Nigerian market, 4 straight sessions of positive reading this week. Looks like we might just have another one today unless anything else happens. But Access Bank Nigeria here making that announcement of his subsidiary in Zambia buying a Kavmont Bank, says to be concluded by Q4, just a couple of months down the line. That is like good news. Corn oil earnings was in the waters. That's in the petrol retail business. The story is out there about the new petrol prices in Nigeria because crude prices has gone 44, 45. In neighboring Cameroon, Heineken announced it yesterday, selling 502,000 kind of shares in the local brewing sector for about 42.3 billion CFA francs. So a rival, Castor Beer, is the one now looking very nice and happy within the Cameroon market. PMI for Ghana unchanged at 49.7, trailing Nigeria's private sector number that came in yesterday about 50.9. So let's weigh in on the banking sector, Joshua.
Right. Okay. So this is just like you said, the continuation of the story that we had earlier spoken about with Access Bank. This is just saying that basically they're in the final stages of concluding the merger with Kavmont Bank. Now, interestingly, they claim that this will take the new entity, the new Access Bank Zambia, into the top 10 largest banks in Zambia. Just doing a brief look at Carbon Bank's financials, you see that for the last 2 years, they were actually a loss-making entity. They made a loss of about 15.8 million Zambian kwacha last year and 41.7 the year before that. But in terms of their assets, they have about 1.2 billion Zambian kwachas in assets, and I think that's what Access Bank is really interested in, is growing their asset base and having a commercial arm, because it seems as if Access Bank's core strength, not just in Nigeria before they took over Diamond Bank, but across the continent, has not been really in the retail banking space. And so this is just going to help them to push for a more retail focus and increase their customer base, increase their deposit base, and really attack that market as well, and eventually become a larger player in that market. And I think it's a good one, and we expect that there shouldn't be too many objections from the authorities in Zambia to the merger, so that should come to fruition by the end of the year, by Q4. However, I doubt it will add much in terms of profits or retained earnings this year, at least, just because it doesn't seem as if the entity they're taking over has been very profitable in the last few years.
So you think, how soon do you think this will begin to show up on the books of Access Bank Nigeria? 2 years down the line, or a year?
Well, the thing is, I think it will definitely start to show up by Q1 next year. However, the issue will now be exactly how much of a contribution it would be, because at the moment, I think even accounting for the exchange rates and their currency, the total contribution to gross earnings is likely to remain fairly minimal, at least in the near term. But as time goes on, maybe in the next 2-3 years, we might start to see a larger contribution as they grow their business in that space. But for now, I think next year it will definitely reflect, but it won't be anything more than less than 5%.
For this week, Joshua, we'll come back to you. It's been a very tremendous interest in the banking space. I'm sure you agree with me in terms of volume movers, in terms of price, and it looks like news and earnings are the major trading theme for this week. But let's think about that for about a minute. Let's quickly touch with the Southern African market, where MTN made some news about divestment yesterday from the Middle East. But then South Africa's GSE Group PLC yesterday reported the revenue, net profit, earnings per share, double-digit growth. EBITDA also grew double-digit, nearly 30%. And the PMI numbers, although still below the threshold of positivity, was better in July than in June. So that's 44.9 from against 42.5 previous. Afreximbank continues to pour, money continues to pour into Mozambique LNG project. This is a sweet story for Mozambique. Afrexim says it's putting $400 million. Part of that will be guarantee, part of that will be direct investment in the project. And in Zimbabwe, the president and his deputy, according to news media reports, seem to be at war of words over the economy, raging inflation, and what have you. Don't let us start from the trouble at the bottom of the page, Ali. Let's start from the sweet story of the GSE earnings at the top of this page.
So absolutely, it is a sweet story. And I think this speaks to the Johannesburg Stock Exchange understanding financial markets, making itself liquid and attractive. And you see it in the numbers. They revenue up 22%. That's tremendous. Net profit 22%, EPS up 22%, and EBITDA up 26%. Who can argue with that? I mean, you would really urge all the other stock exchanges to pick up the phone or take themselves off to Johannesburg when they can and learn how to encourage trading volumes, how to excite investors. And I think, that it's been helped, of course, by the extraordinary volatility we've had in the first half of this year, where we had that tremendous sell-off, so volumes were big, then we had the buyback. And, people will reach for Johannesburg. You've also had the added sexy twist of the gold stocks there, so that's got people excited as well.
The diversity of the products on the GSE is amazing. They've heard so much more about derivatives this year. Even under the lockdown, folks were just trading these various assets, derivatives and other papers, not just within South Africa, within and around the world. I think that's where the numbers are coming through.
Highly innovative, highly switched on people, first world stock exchange in Africa, really, I must commend them. PMI, look, we know that the South African lockdown was pretty severe, so we're not expecting some bright-eyed and bushy-tailed rebound. We're expecting a gradual story, and that speaks to that gradual rebound. It's still below 50, but I think it's not plumbing the 30s, for example. So I would say that that's in line with expectations. Afreximbank, that's interesting, committing $400 million to Mozambique's LNG project. The US Export-Import Bank also are committing a huge amount of money, over $5 billion to that same project. Look, this is equivalent of the gas discovery in Qatar. It's massive. It's going to make a dynamic difference. It's geopolitically important. It's going to serve the Asian markets, I would have thought, because of the Indian Ocean. And you've got, in particular, the Americans, Total, all playing a big role. And it seems to me there is a lot of momentum now behind this. It was on-off. The discoveries were in around 2010 or around there. But it now really looks as if the money's being put to work. There are some issues, but we've spoken about them. A lot of the gas is in the north, in the Cabo Delgado province, where there's a raging insurgency. And even the Russian, Putin's right-hand man, had to run away with his tail between his legs because he took an awful battering from these insurgents, about whom we know very little until now. But nevertheless, this is a big, big story, and it's going to be transformative given the size of Mozambique's economy. Zimbabwe is the last story on your list, and this is interesting. This was a war of words between President Mnangagwa and his deputy Chiwenga. Chiwenga was instrumental in putting Mnangagwa into power, and Mnangagwa accused Chiwenga of joining forces, according to this Bloomberg report, with the opposition, seeking to kind of topple President Mnangagwa. But look, you've got 700% inflation. You've got a currency which is probably the worst performing currency in the world. And you've got a major, major witch's brew of a situation in there. And I really think it's at a tipping point moment. We thought it was at a tipping point moment before, but now I just don't know how this gets resolved. I will say, coming from that part of the world, this is one of the richest economies in Africa, really. It could feed not only itself, but the rest of the region. They've just got to get themselves back into a good position. And we all sincerely hope the best for the Zimbabwean citizen.
Zimbabwe is a diamond in the rough. That's what it is. It's just a diamond under the. Just need to clean it up, politically speaking, and all of that. Then you got a shining gem in your hand. That's what that country is within that African East and West African corridor. Let's check in with Joshua with the banking sector. I saw a number of deals this week. I saw volumes in FBNH, consistently in GT Bank. I saw a bid in Access Bank. In fact, FBNH seemed to be on that volume movers throughout the 4 sessions we had so far this week.
Right. Well, so I think it's just positive sentiment really around the results. Obviously, they reported some very, very strong year-on-year growth for their half-year performance, even though their Q2 performance was a little bit worrisome. But overall, I think they're in a good position. The expectation is that all the other banks are going to post even more positive numbers, and I think that's what investors are really positioning for. Is that the expectation now is that the banking sector is going to come out of this pandemic in a better position than was expected. And so a lot of investors have really just been taking good positions. I mean, we've seen the banking sector doing, it's done 2.5% up this week alone. So that just tells you that investors have seen based on, the smaller banks that have released their results, and they showed, FCMB did extremely well when you look at their results. And so that has sort of given the impression that when these larger banks release, they're going to release positive results and there will be interim dividends. And if that is the case, then we are likely to see another surge. And those results should start to come in, sometime next week, probably towards the end of next week.
Joshua, then you look at the 25 billion naira that FBNH Holding says they're taking out of the sale of the insurance business and putting in First Bank. And that looks like one big chunk of money that the market just went like, oh my, they didn't disclose the total naira, whatever returns they make on that sale, but 25 billion out of that to support First Bank, that looks like one big news on the street. That's enough to buy a big bank license from the central bank.
Right, exactly. So again, like you said, so that 25 billion is going to improve First Bank's capital adequacy ratio to about 16.83%, I believe. And so that puts them in a much stronger position, because there were some worries, especially I know from international firms that were a bit worried about the capital adequacy ratios of our banks due to the devaluation. And they worry that a couple of banks might start to see weakened capital adequacy as a result of the fall in the naira. Now, obviously, First Bank has recognized that, and they have done the needful and injected some capital into that business, and so they are in a strong position. So I think that is also going to be positive.
Maybe some other banks should do the same.
Well, I mean, only banks that have subsidiaries that they can sell off for a significant profit and then inject the money into their banking subsidiaries. But also that might also create an opportunity for some banks to engage in capital raising one way or another, going down the line. I don't know if that would be feasible this year still, but maybe sometime in 2021 we might start to see, based on whatever happens with the currency, some banks just coming in to, shore up their capital really, and just ensure that, they're in a stronger position. But I doubt that, we're going to see any real terrible losses. Even First Bank that recorded 30 billion in provisions for H1, they had justifiable reasons for doing so. They were just being prudent, and they don't expect that would materially worsen in H2, although other analysts have their own expectations. But I think that if they're able to manage their NPLs, and shore up their capital like they have done, then the banking sector is definitely in a strong position, and that is why investors are still going in there little by little with good volumes.
Interesting. Let's look at North Africa very quickly, and I'm sure Ali, just 1 minute or so thoughts about the consolidation still going on across Africa. But again, this is becoming very worrisome in North Africa. Yesterday, the Mauritania's prime minister resigns because of corruption probe, then investigations, then a new one was appointed. This corruption investigations rocking the government. We're seeing some of this political instability in a few other countries within that. Now it's moving around to Western Sahara. That doesn't look like good news. Meantime, Egypt seems to be concentrating on riding on its economic horsepower, signing a deal with Greece for that special economic zone. The sweetener there is that there is oil and gas reserve within that special economic zone. If I have oil and gas in an economic zone, it's just put icing on the cake for me. Meantime, Somalia is banking that its first oil licensing round will lead to economic development. On social media, some folks say, don't get too happy, look at Nigeria. Anyway, Morocco is selling $2 billion sovereign bond in September. Ali, I'm getting worried about this raft of political nuances around the Northern African corridor.
So really,
and
you're
coming down to Mali as well.
Yeah, so let's try and be a bit broader. I mean, this Mauritania situation, there's a lot of political uncertainty this year. West Africa, we've got Ivory Coast, President Ouattara going for a third term, Alpha Conde in Guinea going for a third term. We've got this uncertainty in Mauritania. Somalia, we had the decapitation of the Prime Minister, which happened like that in Parliament. So, you know, it's difficult to read, but, you know, there is plenty of uncertainty now, political uncertainty that's around. And I think investors need to factor in the political volatility into you know, their decision making. And it strikes me that we're in a period now of elevated political volatility from east to west and from north to south. We were talking about Zimbabwe, Somalia, Mauritania, you name it, and of course Libya, which is still unresolved as we speak. But I think that's an important issue for investors. Egypt, Greece, this is interesting, particularly because Egypt is in opposition to Turkey, who is always seen as being in opposition to Greece. So you can feel that the Egyptians probably reached out to Greece much more aggressively in the current environment of the geopolitical power plays we're seeing in the Mediterranean, in Libya. But this is I think, a positive development for Egypt and Greece, in point of fact. Somalia, of course, as we said, Hassan Kairi, the prime minister, was decapitated a couple of weeks ago, not metaphorically speaking. And they're now pushing on with this oil licensing round. You know, Somalia, by most counts, is a top 10 potential oil and gas producer, but because of the civil war and the uncertainty, you know, this has not really been exploited. And there was also the issue with Kenya about how to draw the line into the Indian Ocean for the deep sea assets, and that went to court and is still unresolved. But obviously, they're trying to put some speed into this process in order to raise capital, which makes sense. And Morocco to sell $2 billion of the sovereign bond in September. The sub-Saharan African Eurobond market has been largely closed to sovereign issuers, with the exception of Egypt, which issued, I think, a few weeks ago. So Morocco will be a real test to see if there's appetite. Of course, it's seen as more credit worthy than the average African country. Therefore, it is, if you look at a credit spectrum, it's coming out at the better side of the spectrum. But that will be a great test. They've been big issuers in euros, so that's interesting that they're coming to the dollar market and that they're talking about such a big ticket. I think it will be fully subscribed because I think they'll price it to clear.
I'm very hopeful as well. At least let's have a test case for this year, and then we can use that as a playbook for the rest, such as Nigeria, that seemed to be lost somewhere on the high seas as to where to go. The Chinese aren't coming in yet. The Washington folks aren't bringing any money yet. EFDB hasn't put in a single dime. So Nigeria would really love to find that a leeway, as it were, and at least bring some currency in. Isn't that so, Joshua, because of the FX liquidity on the final note, Nigeria currently face?
Yes. So obviously investors are extremely worried, and we know that there's a little bit of a backlog in terms of demand for FX from the CBN, and they have said, you know, that everyone should form an orderly queue and that they will get to them eventually. However, I fear that might be, you know, a significant amount of time, and so that will just create even more panic for international investors, the ones that are in the country trying to get their money out, and it will definitely mean that all the investors outside of the country will be very reluctant to re-enter the market, which is again part of the reason why, even though we've been seeing some gains in the market recently, they have not been at the levels that we would like, because of the fact that those international players are not really, you know, participating. If they were participating up to these levels, I think that the sentiment we see in the market will be even more positive. And obviously, it's all down to the fact that there's very, very low liquidity of FX in the market at the moment. That is the main problem.
Thank you very much, Joshua Adebisi from Vertiva Capital Management. Have a great weekend. And Ali, we appreciate your time in Nairobi, CEO and founder Rich Frontiers Management. Have a great weekend, everyone, and see you on Monday. Bye for now.